Okay, today another video and another demonstration that I'll ask you to follow along. You'll need again today that hard copy of the General Journal for the corner grocery store. We used that yesterday a bit, now we're going to use it more today. So hopefully you have that available. I told you earlier to make a hard copy and have it so that you can refer to it. So what we will do is to demonstrate a few postings. What we are talking about when we say posting is to move information from the journal to the ledger. Relatively simple, but let's follow along to make sure we are clear on how to do this. So if you look at that corner grocery store general ledger, the very first entry is dated February 1, 2017. You see a debit to cash, a credit to sales for $2,500. And the description says cash sales for the day. Pretty simple transaction. So we take one line of it at a time. We begin with the debit part, cash. So we find cash in our general ledger, and I have the assets tab open. Remember these tabs at the bottom: assets, liabilities, owner's equity, revenue, expenses. Those are tabs that will open those kinds of accounts. We begin with the asset account of cash, and that's up here. You see cash account number 101. So the date we will put in is 2/1/17, and it is debited. You see in the journal we have a debit of $2,500. Makes sense. We gained $2,500 in cash that day. So we put that in. This is when we use that reference column, and if you look at the corner grocery store, it should say at the top right hand corner of the journal page, the general journal page, page 2. Page 1 was obviously used in January, and we're beginning page 2 in February. So after we put this in this little reference column, we will put J2. That will tell us if we are wondering sometime down the road, where did that 2,500 come from? This will tell you to refer back to journal page 2. The description column is rarely used. If something unusual happens, we can put that in there, but typically we don't need that, so it's empty. All right, then this is when the number in the ledger is used, 101. We would take that back to your general journal page. I don't have that in front of me on my screen, but you should have it on your desk, hopefully. You will also see in the general journal there's a reference column, and this is what we put in the reference. On the same line as cash, you would put 101. That would tell me, if I'm looking at the journal, that this 2,500 went to the debit side of account number 101. So let's look at the credit part. Looks pretty self-explanatory. It says sales. So down back on our screen, if you go to the screen, if you look at the tabs at the bottom, we're not going to need to find the revenue account. We have a revenue account. We click on that tab at the very bottom, and we find sales, account number 401. And as I said yesterday, this account at the beginning of an accounting period, in this case the month of February, has no money in it. So we will now put some in. The date of the transaction is 2/1/17. We tab over and we will credit. If you look at the general journal, the amount of 2,500 on the same line as sales is credited, and that's what we do. We should know that sales is a revenue account. When it goes up, when we make a sale, it increases. Increased side of any revenue account is the credit side. So now we have 2,500, and again we need to fill in our reference. We got it from J2, and there's our entry. The 401 then would be taken back to the journal that you should have on your desk. On the same line as sales, then the 401 is put on or in the reference column. So now we've just posted one entry. Let's look at the next one. Next one says February 1, again, accounts receivable for sales. We made some sales apparently, and as the description says, these are charge sales for the day. So we do the same thing. We look at the debit part, accounts receivable, which is an asset. Let's go to the asset section, find accounts receivable. There it is, account number 102, and we put the date. The date is 2/1/17, and we tab over. This is debited, correct? If you look at the journal, accounts receivable was debited by $1,200, and the reference again will be the journal page, page 2. Okay. The other part of that transaction is again sales. Let's go back to sales, and again same date, 2/1/17. We would put that in. These are separate entries, so we put them in individually. Again, a credit. So the sales went up again. We increased sales by 1,200, and we will again put in J2 for the journal page. Okay, and that's simple enough. This will tell me if I want to do some quick addition. That day of February 1, we made total sales of what? $3,700. Okay, some of it was cash, some of it was on account. Okay, third entry, February 2nd, electricity expense was debited. Well, let's go to the expense account. On the tab at the bottom, you see expense. Click on that tab. Electricity expense we see is account number 501. The date is what? February 2nd now. Whoops. Of 17, and electricity expense was debited by $98.50. Okay. Electricity is an expense. It is debited on, or increased on the debit side, and we now have paid more money for expense, so it has gone up by $98.50. The same journal page, J2, and again, the account 501 would go back into your journal on the same line as electricity expense. Part of that same entry, cash is credited. Let's go to the assets account, and you find cash. Put in the date, and now you see in the journal, cash was credited because we spent some money. So now we credit cash by $98.50. Again, the journal page is J2, and your account 101 would be back into the journal on that same line. So you see how this is starting to work. After a while, it becomes pretty simple as long as you have the journal entry correct. Let's look at another one. February 3rd, you see accounts payable debited. What happened here? Well, we paid on account. We see cash was credited. We paid on account. We wrote a check, 102, and we paid some money that we owe. So let's go find the debit part, which is accounts payable, and that is a liability, correct? There's accounts payable, and on January 31st, we owed 500. What's going to happen here? Well, 2/3/17 on the 3rd of February, we debited, according to our journal, we debited electricity, accounts payable by $500. So now, and then a little J2 goes in there. Now you see that accounts payable has a credit, which is an increase of 500, and now it has a debit, which is a decrease of 500. So we don't owe anything. We've paid up the bill. So that's the idea. That's what we hope to eventually do with all of our accounts payable. The number for this account is 201. That goes into the journal on the same line as accounts payable. And once again, cash is used. And we go to our cash account, and we credit because we paid some money out. If you look at the journal, there is a credit for $500 for cash, and that goes down. Once again, J2 in the reference column, account 101 back into the journal, same line as cash. Okay, let's look at the next entry, February 6th. Debit is to office equipment. Description says we bought our office equipment for cash. Office equipment should be an asset. It's something that we own. Over here in the asset, on the asset section in that page, we see office equipment, and we will go to the date column, February 6th, and it is debited according to the journal. Office equipment is debited by 1,000. And again, our little reference, J2, journal page 2. And you see that we have now more office equipment. We had 11,800, we added another 1,000. And we bought it for cash, so we always have to go to the credit part of the entry. Cash is credited by 1,000 according to the journal. And that journal page is page 2. So you see cash account used quite a bit, and it typically would be. Next account, again, we bought an asset. We bought inventory on 2/7 of 17. So we find our inventory account in our asset section, and because we have gained more inventory, we bought more inventory, we will debit. Assets go up on the debit side. So you can see that we have almost 70,000 in inventory now. So it's debited, it went up, it's an increase, and the J2 tells me where I got it. So this time I gained inventory, but I didn't pay cash for it. How did I pay? Well, I charged it. You can see that in the description, we'll say that we bought it on account. So now I have to find a liability. Down at the bottom, I tab the liability tab, and I go to the accounts payable, and this is February 7th, and I will credit. Now we owe money. We had it paid off our 500, but now we owe another 6,000 to somebody. Okay, and J2. We do have a way of keeping track of who we owe that to in our books, but we're not quite there to get into that much detail at this point. We could put it if we wanted to in the description column, but it's typically put in a different place, and we'll talk about that in the fourth quarter again. One more transaction. Back in the journal on February 8th, we paid some expense, phone expense. So we find our tab at the bottom of the page, right here, tab on expenses. Find, in this case, telephone expense, and it's 2/8/17. And the expense we paid was $123.25. That's debited. Again, J2, and the account 502 goes into your journal. And we paid cash. We gotta go back to the assets, find cash. 2/8/17. Tab over, cash is credited, right? We paid money out. And once again, J2 tells us where we got it. So you can see the process. After a while, it becomes a little simpler. It's typically taking information from the journal, which is a chronological record, putting into the ledger, which is an account by account record of how the transactions affected the different assets, liabilities, and so on. So there may be a couple questions at the end that I want you to answer, so go back and take a look at that, and we'll continue from there.